you're seeing some real divergence between European policymakers and the German automakers. What can you tell us about it?
Right, exactly. I mean, if this is exposing the rift between China and the EU, it also exposes some of the more minor rifts within the EU itself. You know, we understand that this was pushed for really by France, and you can understand why. They do about 90 billion euros worth of trade with China last year. Germany did 300 billion. And when you look at the car makers, it's even more exaggerated. Renault only gets about 6% of its revenues from Asia Pacific. For the big three in Germany, it's more than a third of the volume that they do.
Imagine the world's most prestigious car brands suddenly facing a challenge they never saw coming. A sleek, high-tech electric luxury vehicle from China that costs a fraction of their price. This isn't just about cars anymore. It's a wake-up call signaling a major shift in global power, technology, and industry. How did the giants of the West get pushed to the edge? And what does this mean for the future of innovation and economic dominance?
Buyers in China no longer as interested in German luxury cars.
I think it's not only German luxury cars, it's overall international brands. They are kind of strolling away from, pretty much driven by the Chinese government policies and philosophy to go more into a, make China great again, and especially by Chinese philosophy.
Something significant is unfolding in the global auto industry, one that might reshape how we view the future of mobility and manufacturing. For decades, Western luxury car makers such as BMW, Mercedes-Benz, and Audi have dominated the premium market. Their brands have long been associated with prestige, wealth, and advanced engineering. But the landscape is shifting. What once seemed like a distant possibility is now unfolding in real time. China is emerging not just as a major player in electric vehicles, EVs, but as a serious competitor in the high-end luxury segment.
Now, they have some joint ventures over in China, which means that those would be spared from tariffs under this scenario. However, the super high margin cars, the Porsches, the Maybachs, S-Classes, 7 Series, those ones are assembled, many of them here in Germany and in Europe, and then shipped over. So if you get some tariffs and some trade barriers coming up, it's going to hit those profit centers of those extremely high margin, extremely expensive cars.
And at the same time, we're not just talking about tariffs when China and the EU, the UK also a factor there. Why do we pay attention to the EV story here in the UK?
The recent unveiling of the Mextro S800, developed by Chinese tech giant Huawei in collaboration with automaker JAC, Anhui Jianghuai Automobile Group, has drawn global attention. On the surface, it might look like just another EV entering an already crowded market. But the Mextro S800 represents more than just another luxury car. It signals a turning point. Its arrival is prompting difficult questions inside Western boardrooms. Can legacy automakers adapt fast enough to this new competition, or are they already too far behind?
But in how far is this also a competition problem within the country with other car makers?
It is more a competition problem in terms of the new energy vehicles, NEV, which comprises of the battery electric vehicles and plug-in hybrids and fuel cell cars, which are not as much in the demand, but plug-in hybrids and electric vehicles, paying then into the point that Chinese buyers are held back by the Chinese policies. And really, there is a kind of this type of chauvinism coming up that you should buy Chinese. This is pretty much one of the big reasons. It's not about technology.
Western brands have long held a comfortable position in the luxury market. The general perception was that Chinese manufacturers were good at making affordable, entry-level vehicles, but lacked the experience, design sensibility, and technological refinement to compete in the premium space. This assumption is now being challenged, and not gradually. Huawei's entrance into the luxury EV segment is bold, and it comes with backing in the form of cutting-edge tech, competitive pricing, and a clear strategic vision. What makes this shift especially noteworthy is that it follows a familiar pattern. In recent years, Chinese firms like BYD and NIO have made steady progress in the EV sector, gradually chipping away at the dominance of companies like Tesla. For instance, BYD surpassed Tesla in global EV sales in late 2023 by focusing on affordability and domestic market strength. The strategy worked. It allowed Chinese brands to scale rapidly, improve their technology, and gain consumer trust both at home and abroad. Now, that same playbook is being applied to the luxury segment. Except this time, the implications could be even greater. While the budget and mid-range EV markets are important, the luxury segment carries significant weight, not just in terms of revenue, but in brand identity, influence, and customer loyalty. Traditionally, selling high-end cars has allowed Western manufacturers to fund research and development, support wide-ranging product lines, and retain a halo effect around their brands. The launch of the Mextro S800 disrupts this model. Priced from around $98,000 to $142,000 USD, it enters the market well below the cost of many Western equivalents, including top-tier models from Mercedes-Benz and BMW. Despite its relatively accessible price for a luxury EV, the Mextro S800 doesn't cut corners. It boasts advanced performance features, elegant styling, and a suite of technologies that position it firmly in the ultra-luxury bracket. While Western brands might argue that performance and design take years to refine, Chinese automakers are demonstrating that rapid innovation, when paired with tech expertise and market insight, can close that gap surprisingly quickly. Beyond the vehicle itself, Huawei's involvement is key. Known for its dominance in telecommunications and consumer electronics, the company brings a different perspective to the automotive world, one that emphasizes connectivity, digital experience, and systems integration. As vehicles increasingly function as mobile platforms integrated with software ecosystems, companies like Huawei are well positioned to lead this evolution. It's important to recognize that this moment didn't emerge from nowhere. Over the last decade, China has heavily invested in its EV industry. Through a combination of government support, strategic partnerships, and massive domestic demand, the country has built up the infrastructure and expertise needed to compete globally. Brands that were once considered copycats or newcomers are now setting trends and establishing benchmarks. This transformation is also driven by changing consumer preferences within China. Whereas Western cars were once seen as aspirational, many Chinese buyers today are actively choosing homegrown brands. National pride plays a role, but so does genuine satisfaction with the quality, design, and innovation offered by local companies. Surveys in recent years have shown that Chinese consumers increasingly prefer brands that reflect modern lifestyles and forward-thinking values, qualities that many domestic automakers now embody. Western companies are not unaware of this shift. Behind closed doors, there is growing concern that they may be entering a period of sustained decline in markets they once dominated. Sales figures are already reflecting this trend. According to reports from late 2024, BMW and Mercedes-Benz both experienced notable drops in their Chinese sales. For companies that rely heavily on China for revenue, sometimes up to a third of their global income, these numbers are more than just disappointing. They are alarming. In response, some manufacturers have begun cutting prices, particularly in China. However, aggressive discounting can only go so far, especially when the core issue isn't just price, it's value. Chinese luxury EVs are now delivering a better mix of performance, tech, and affordability, and the advantage goes deeper. With domestic supply chains that span from battery materials to chip production, Chinese automakers are able to reduce costs and streamline production in ways that Western companies, often dependent on imported components, cannot easily match. Another factor is speed. The pace at which Chinese companies innovate and bring products to market is often significantly faster than their Western counterparts. This agility gives them a strong advantage in a market that is evolving rapidly and where consumer expectations are changing year by year. While Western firms are tied to long development cycles, complex legacy systems, and often cautious shareholders, Chinese startups and conglomerates alike are able to experiment, adapt, and iterate quickly. Of course, some observers argue that the playing field isn't entirely level. China's EV industry has benefited from government subsidies, favorable policies, and access to protected domestic markets. These elements have undeniably supported its rapid rise. But focusing solely on those factors risks overlooking the broader picture. Today's Chinese automakers are not just thriving because of policy support. They are building competitive products, developing distinctive design languages, and embracing new technologies at a pace few others can match. The arrival of the Mextro S800 should be seen not as an isolated development, but as part of a larger shift. It is one more sign that the traditional balance of power in the auto industry is changing, and changing quickly. Whether Western companies can adapt remains an open question. But what's becoming increasingly clear is that China is no longer playing catch-up. In many areas, it is setting the pace. As the world watches the evolution of the luxury EV space, it's worth remembering that disruption often starts quietly. It's only when the market begins to shift in visible, measurable ways that people start to take notice. The Mextro S800 may be just one car, but it represents something far more significant. The moment when the West's grip on automotive prestige begins to loosen, and a new era of global competition begins to take shape. In order to fully understand the challenge Western automakers are facing, it's important to look at the numbers behind China's growing dominance in the electric vehicle market. The Mextro S800, introduced by Huawei and JAC Motors in May 2025, is a significant example, but it is only one piece of a much larger puzzle. The Mextro S800 is a luxury electric sedan that starts at a price point of roughly $98,000 and can go up to around $142,000, depending on the configuration. For this price, buyers get a vehicle that offers high performance, innovative technology, and elegant design, features that rival or exceed what many Western luxury vehicles provide at much higher prices. While the price may seem high at first glance, it is strikingly competitive when compared to models from Mercedes-Benz, BMW, and even Tesla's premium offerings, many of which cost 2 to 4 times as much. In the first month after its launch, over 6,500 pre-orders were placed for the Mextro S800. That might appear modest when compared to mass-market vehicles, but for the luxury segment, it is a clear indication of shifting consumer preferences. Luxury car buyers tend to be more discerning and loyal to established brands, so such strong initial interest shows real confidence in Huawei's product. The importance of China as a market cannot be overstated. In 2023, China accounted for approximately 26 million vehicle sales, which represents nearly 1/3 of global car sales. This makes it by far the largest single automotive market in the world. By comparison, the United States and Europe combined sell fewer vehicles than China alone. For major brands like BMW, Mercedes-Benz, and Audi, the Chinese market is crucial, often representing about 1/3 of their total revenue. Losing ground in China, therefore, has profound implications for their overall financial health. Recent data highlights how Western brands have already begun to feel the pressure. BMW's sales in China fell by nearly 30% in the third quarter of 2024, while Mercedes-Benz experienced a 10% decline during the same period. These are not minor fluctuations. They are significant blows to the business models of these automakers. In previous years, profits from the Chinese market helped fund investments in research and development, new factories, and global expansion. A sustained downturn in China means companies may need to cut back on these initiatives, resulting in slower innovation and reduced competitiveness over time. What's more, Chinese consumers are increasingly turning away from Western brands altogether. This trend is driven by several factors. First, state subsidies and policies continue to make Chinese electric vehicles more affordable than their Western counterparts. Automakers like BYD, NIO, XPeng, and now Huawei offer high-quality EVs at prices that Western manufacturers struggle to match without sacrificing profit margins. But beyond pricing, national pride and consumer loyalty to domestic brands are playing an important role. Many Chinese buyers see homegrown automakers as symbols of national progress and innovation, making these brands more appealing than foreign ones. The result is a complicated scenario for Western manufacturers. They find themselves in a price war they cannot win, forced to slash prices to stay competitive. For example, BMW reduced the price of its EX1 model by over $20,000 in China in an attempt to compete with Chinese alternatives. This approach may temporarily boost sales, but can significantly erode profitability and brand value. At the same time, Chinese automakers are moving past the image of producing cheaper or lower quality vehicles. They are now leading in areas such as technology, performance, and luxury. The Mextro S800 is a clear demonstration of this trend. Its performance specs include 3 electric motors delivering a combined output of 852 horsepower, capable of traveling up to 702 kilometers on a single charge. Thanks to advanced 5C fast charging technology, its battery can recharge from 10% to 80% in just 12 minutes. These features put it in direct competition with luxury models from Mercedes-Maybach, Rolls-Royce, and top-tier BMW vehicles. Inside the Mextro S800, the technology extends beyond power and range. The car integrates Huawei's Harmony OS, providing a seamless digital environment across a triple-display dashboard. The audio system consists of 40 surround sound speakers, creating an immersive listening experience. The interior design is also noteworthy, featuring zero-gravity seats, a star-like ceiling, and high-quality materials comparable to the finest European sedans. Yet the biggest surprise for many is the price. While a Mercedes-Maybach S680 can cost upwards of $416,000, the Mextro S800 comes in at less than a quarter of that price, offering similar levels of luxury and technology. Behind the scenes, China's strength in electric vehicle production stems from its control over critical parts of the supply chain. Chinese companies produce between 60 and 75% of all battery components worldwide. Firms like BYD and contemporary Amperex Technology Co. Limited, CATL, alone are responsible for more than half of global battery production. This control gives Chinese automakers a substantial cost advantage, estimated to be around 20 to 30% lower than Western counterparts before manufacturing even begins. This advantage is not accidental. It is part of a deliberate, state-aligned strategy to vertically integrate the entire EV industry, from lithium and rare earth mineral extraction to battery manufacturing and final assembly. Such integration enables faster innovation, lower costs, and the ability to scale production quickly to meet growing global demand. Western automakers, on the other hand, depend heavily on complex, often fragile global supply chains. Many key components, including batteries, electronics, and semiconductor chips, are imported from China. This creates vulnerabilities. Any disruption to exports from China, whether due to political tensions, trade restrictions, or logistical issues, can directly impact Western production lines. Europe, for instance, relies on China for the majority of its electronics and battery materials, which raises serious questions about industrial sovereignty and supply security. The significance of this situation extends well beyond the auto industry. Electric vehicles today are more than just cars. They are part of a wider technological ecosystem that includes digital infrastructure, data platforms, and energy grids. Automakers are transforming into technology companies that provide integrated mobility solutions. Control over these emerging ecosystems means influence over the future of urban transportation, energy management, and even smart city development. China is positioning itself at the heart of this transformation. Its approach is to not only build vehicles, but to control the software, hardware, and data networks that connect them. This provides Beijing with strategic leverage in shaping the direction of future technology standards and consumer experiences worldwide. This shift is not lost on Western tech leaders. For example, NVIDIA's CEO Jensen Huang recently acknowledged the rapid progress of Chinese EV manufacturers, stating that Chinese electric vehicles are the best in the world. Such recognition from a major American technology executive underscores the seriousness of China's technological advancement. Moreover, Chinese automakers are expanding aggressively beyond their home market. In April 2025, BYD surpassed Tesla in Europe, selling 7,231 vehicles compared to Tesla's 7,165. This occurred despite European Union tariffs on Chinese EV imports reaching as high as 45% in some cases. Chinese brands have already captured nearly 6% of the European EV market, doubling their share in just a few years. To counter tariffs and protect their growing market share, Chinese companies are investing in local production facilities. BYD, for example, is building factories in Hungary to manufacture vehicles within Europe, avoiding import restrictions and reducing costs. This strategy not only supports expansion, but also helps Chinese automakers adapt to regional demands more effectively. Meanwhile, Western brands are struggling to keep pace. Tesla's registrations in the European Union dropped by 45% compared to the previous year, while luxury brands like BMW and Mercedes-Benz face declining profitability. High production costs, slower innovation cycles, and ongoing reliance on older internal combustion engine platforms put them at a structural disadvantage against nimble Chinese competitors. Huawei's role in this emerging landscape is particularly noteworthy. The company, traditionally known for its telecommunications expertise, is applying its software and connectivity skills to the automotive industry. This integration of technology and manufacturing is creating vehicles that are as much about digital experience as mechanical performance. Financially, these shifts are already evident. In the second quarter of 2024, BMW reported a sharp decline in profits, while Mercedes-Benz, which derives nearly a third of its revenue from China, also faced significant financial pressure. If these trends continue, Western automakers may be forced to scale back investments in new technologies and the transition to electric vehicles, potentially leading to layoffs, project delays, and retreat from key markets. The Mextro S800 is far more than just a car. It is a symbol of the challenges facing Western automakers, and by extension, Western economies. It signals that the United States and Europe may be losing their grip on the future of technology, industry, and innovation. What happens next could determine not only who builds the cars of tomorrow, but also who controls the underlying technology and infrastructure that shape global economic power in the decades ahead. The rise of Chinese electric vehicles, symbolized by the Mextro S800, represents more than a shift in the auto market. It signals a deeper transformation that is reshaping global technology, economics, and geopolitics. Western luxury automakers such as BMW, Mercedes-Benz, and Audi face an unprecedented challenge, one that goes beyond competition in showrooms and into the realm of strategic national interests. One of the core issues at play is the dependence Western manufacturers have developed on the Chinese market. For many years, China was seen primarily as a place to sell vehicles, a growing source of revenue to fuel profits back home. But as Chinese brands gain strength and begin to dominate the domestic market, the balance of power is shifting. Western companies now risk losing not only market share, but also critical access to a market worth hundreds of billions of dollars annually. For the luxury segment alone, China represents a market estimated at $160 billion. Losing this market would create enormous financial pressure on European and American automakers, forcing them to rethink their global strategies and potentially scale back investment in innovation and manufacturing capacity. Such setbacks would have ripple effects across the broader economy, affecting suppliers, dealers, and even related industries such as technology and finance. More than just market dynamics, the situation reflects a technological war over control of the future. Modern electric vehicles are complex systems that combine hardware, software, and connectivity. This creates new battlegrounds beyond the traditional mechanical engineering skills that Western automakers once relied upon. Now the race is about who controls the supply chains for batteries and chips, who leads in digital ecosystems, and who sets the standards for smart, connected mobility. China's advantage is clear. Its companies dominate the production of key battery components, from lithium extraction to the manufacture of cathodes and anodes. This vertical integration reduces costs and accelerates innovation. It also gives Chinese automakers a strategic edge, allowing them to scale rapidly and respond to market demands more efficiently than their Western counterparts, who depend on fragmented and often fragile supply chains. Europe provides a prime example of this vulnerability. The European Union imports the majority of its battery materials and electronics from China. This reliance exposes European automakers to risks of supply disruptions, whether from geopolitical tensions, trade disputes, or logistical problems. If Beijing were to restrict exports of critical components, it could severely impact the ability of Western factories to produce electric vehicles. The broader implications go beyond cars and factories. Electric vehicles are becoming platforms for new digital services integrated into power grids, urban infrastructure, and smart city technologies. Control over these connected systems offers influence over future economic models and governance structures. Those who dominate the technology behind electric vehicles and their networks will have significant leverage in shaping the future. China's strategy involves not just producing vehicles, but also controlling the software, data, and digital platforms that run them. Huawei's involvement in the Mextro S800 illustrates this approach. The company brings its expertise in telecommunications and software to create cars that are highly connected and integrated into larger digital ecosystems. This integration creates powerful network effects that reinforce China's position and make it harder for Western competitors to catch up. The transformation is already attracting attention at the highest levels of Western business and government. NVIDIA's CEO Jensen Huang, during a visit to Beijing, remarked that Chinese electric vehicles are among the best in the world. Such recognition from a leading American tech executive underscores the reality that the balance of technological power is shifting. It's no longer a question of if, but how quickly China will extend its influence globally. Chinese automakers are not content to dominate only at home. They are actively expanding into international markets, challenging Western brands on their home turf. For example, in Europe, BYD recently outsold Tesla, a feat that took place despite high tariffs imposed by the European Union designed to protect local manufacturers. This success highlights the strength of Chinese products and the determination of these companies to win global market share. To overcome tariffs and trade barriers, Chinese companies are investing heavily in local production facilities. BYD's construction of factories in Hungary is a clear case of strategic adaptation. Producing vehicles within Europe allows Chinese automakers to bypass import duties, shorten supply chains, and better tailor their products to local consumer preferences. This approach is not only economically smart, but also a long-term strategy to cement their presence in key markets. Meanwhile, Western automakers are struggling to respond effectively. Tesla's registrations in the European Union have declined by nearly half compared to the previous year. Luxury brands like BMW and Mercedes-Benz face declining profits due to the combined pressures of high production costs, slow innovation cycles, and outdated reliance on internal combustion platforms. These structural challenges put them at a significant disadvantage as electric vehicles increasingly dominate the market. The financial impact on Western companies is becoming more evident. In the second quarter of 2024, BMW's profits took a noticeable hit, and Mercedes-Benz, which earns about 1/3 of its revenue from China, faced serious financial pressure. Continued losses in these key markets threaten their ability to invest in future technologies, including the transition to fully electric fleets. This could result in layoffs, project delays, and potential withdrawal from important markets like China, further eroding their competitive position. The Mextro S800, therefore, represents more than a new luxury electric car. It is a symbol of how the United States and Europe are losing control over the future of innovation and industrial leadership. The shift goes beyond market share to touch on economic sovereignty, technological autonomy, and national security. As China continues to invest in its industrial ecosystem, Western countries face the risk of falling behind in one of the defining industries of the 21st century. Looking ahead, several questions arise. Can Western automakers catch up, or has China's lead become insurmountable? The answer depends on a combination of factors: investment in research and development, the ability to adapt supply chains, government policies supporting innovation, and the willingness to embrace new business models centered on technology integration. Western governments have started to recognize these challenges and are exploring ways to strengthen their industries. This includes increased funding for battery research, efforts to secure critical raw materials, and policies aimed at fostering domestic manufacturing. There is also growing interest in international partnerships and alliances to reduce reliance on any single country for essential components. However, reversing the current trend will not be easy. China's advantages in scale, vertical integration, state support, and domestic market size create powerful momentum. Its companies benefit from strong coordination between industry and government, allowing for rapid innovation and expansion. Western automakers must overcome not only technological and economic challenges, but also cultural and organizational inertia. Moreover, the race extends beyond cars. It is about who will lead in connected mobility, smart cities, and the integration of vehicles with energy and communication networks. Whoever controls these digital ecosystems will wield influence over how societies function and develop in the future. In conclusion, the Mextro S800 and China's growing presence in the electric vehicle market mark a turning point. Western luxury automakers find themselves under intense pressure, facing competition that is more than just about vehicles. It is about leadership in technology and industry. The outcome of this competition will have lasting effects on the global economy, innovation, and geopolitical power. This moment calls for strategic reflection and bold action. The West must rethink its approach to manufacturing, innovation, and global cooperation if it hopes to maintain its position in this rapidly evolving landscape. Otherwise, the rise of Chinese electric vehicles could signal a new era where the balance of industrial power permanently shifts eastward.